Good morning, Junaid. Good morning, Priyanka. Good morning, Rani, Praveen, Karthik, Vishnu, Om Kakati, Abhishek, Jyoti, Junaid, Yashika, Kirti. Perfect, perfect. Good morning, guys, and welcome to this Sunday morning. And yes, Sunday is a week off. Sunday is an off day, but not for CMA students whose exams are scheduled in June 2022. Sunday is definitely off for rest of the world. For CMA students who are going to give their examination in June 2022, for them, Sunday is not an off day. In fact, they are not taking leaves as of now. No leave is there for the students who have their examination in June 2022, because guys, we cannot afford to take leaves on this momentous occasion of our examination being just around the corner, just 1 month away. And on this prestigious occasion, if you are taking offs, if you are taking leaves, if you are taking vacation or something like that, then we are not giving our 100%. So yes, Sunday, but not a holiday for all of us. All of us are working. All of us have to work for next 1 month rigorously. We have to tirely work towards our goal of June 2022 examination of CMA Intermediate. So yes, what are we going to study today? Guys, we are going to study one of the most important topics of your syllabus, advanced tax. Yes, advanced tax is the syllabus that is the topic which we are going to cover today. And yes, from an exam perspective also, guys, in your last examination itself, that is December 2021, a question from this particular aspect was asked in the examination. It was around 4 to 5 marks. Yes, a small chapter, a very brief concept, but an important one, considering that it has been asked in the last examination. It can recur, it can reappear. So we need to be very much prepared for this particular topic, which is advanced tax. All right, so guys, advanced tax means what? Okay, first let's understand what do you mean by advanced tax and what is the requirement of drafting a section named as advanced tax. All right, so guys, we are talking about this financial year 2022-23. We are talking about financial year 2022-23, when a person is earning his income. So from 1st April 2022 to 31st March 2023, a person is earning his income. Now naturally, guys, unless and until person knows what is his income, what is his taxable income, how can he pay taxes? So government of India has to wait till 31st March 2023, till the time all the incomes are earned for this particular year. And then after 31st March 2023, whenever government wants, it can calculate the total income which has been earned by an assessee during the year and can recover taxes from that particular income. A fair point. A very fair point. And guys, that is the reason why this year is known as the previous year and the next year is known as the assessment year. This we had studied in our first chapter, basic concepts. This is the reason why this year is known as the previous year and the next year is known as the assessment year. That is the difference. That is the reason why the assessment year and previous year have a different annotation to it. Now, obviously, guys, during the next year, the income which has been earned for the previous year is required to be ascertained, is required to be assessed, and is required to be taxed, right? So in the assessment year, what are we going to do? We are going to assess the income which has been earned by the assessee in the immediately preceding year. And in that year itself, we should pay tax to Government of India. A very fair point, a very logical point, that yes, you please earn income till 31st March 2023. You earn income till 31st March 2023, and then you pay your income tax in the subsequent year. A very fair point. Corroborating this point, guys, return of income is required to be filed in the assessment year also. So for individuals, the timeline is 31st July of the assessment year. So 31st July 2023 is the year when return of income is required to be filed. What is return of income? Return of income means a summary of what all incomes have been earned during the year and what taxes has been paid by the individual. That is known as the return of income. So return of income is also required to be paid in the assessment year. All the computations are required to be made in the assessment year because it is practically not possible to make any exact computation in the previous year while you are earning income. It is not possible to compute a tax in the previous year itself. Now, there is a catch to this entire story. What is the catch? Government of India is asking you to pay taxes for this particular year in the same year. And this is known as advance tax. What do you mean by advance? Advance means a tax which is levied before time. The right time to collect taxes is, of course, after the end of the financial year. The right time to collect taxes is that this is the right time to collect tax. Before you file your return of income, you should pay your taxes to Government of India. This is the right time to pay the tax. But Government of India is saying no, you will pay the tax beforehand. That is, you will pay the tax in advance. This is known as advance tax. Now, sir, the question is, how can we pay the tax in previous year 22-23? We are earning income in the previous year 22-23. So unless and until this year ends, unless and until this year finishes, how will we know what is our income? How will we know what is our tax? We will not be able to know it. If we are not able to know it, how will we pay taxes in this particular year? We will not be able to pay taxes in this particular year. So, what is the mechanism, sir, whereby we can actually calculate our advance tax? That is the main subject of this chapter, advance tax. The concept is very clear: pay as you earn. Simultaneously, as you are earning your income, you have to pay taxes to Government of India in a simultaneous manner. That is the whole objective of this chapter, advance tax. Now, of course, guys, the question is, sir, how can we estimate income and expenses and taxes during this year? How can we pay advance taxes during this year? So, guys, the fundamental is very, very clear, is very, very simple. Government of India wants you to estimate your best estimate, your best judgment of what will be your taxes till 31st March 2023. Government of India wants you to estimate, to predict, to on a very broad level, to assess what will be your income and income tax during the year. That is the background behind advance tax. So what will be your income? You need to predict. So there are certain milestones which has been fixed by Government of India. First milestone is 15th June of the previous year. Second milestone is 15th September of the previous year. Third milestone is 15th December of the previous year. Fourth milestone is 15th March of the previous year. So guys, on these four milestones, you have to estimate your income which you have earned, and accordingly you have to pay advance tax. On the first milestone, which is 15 June 2022, you have to pay 15% of your total tax liability, which you have estimated. Again, guys, based on estimate, we are playing this game. This game is entirely based on estimates. What is your estimate of your income for the entire year? And guys, it's not difficult to estimate this income. Why? Because big companies have got their budgets, big companies have got their plans which are in place, and those plans will reveal what is the income which may be earned in this particular year. So it's not a very difficult task, it's not a very Herculean task to estimate. Estimation is not very difficult. So on an estimate basis, Government of India is asking you to pay taxes. 15% of the total tax should be paid by 15 June 2022. Then 15 September 2022, 45% of the total tax should be paid up till 15 September 2022. Then 15 December 2022, 75% of the total tax should be paid up till 15 December 2022. And up till 15th March 2023, 100% of the total taxes should be paid by an assessee. So, in effect, before the year closes, advance tax is required to be paid up to the extent of 100%. This is known as advance tax. Yes, might sound a bit a bit greedy from point of view of income tax department. Guys, doesn't matter if income tax is collected over here or income tax is collected over here. How would it matter? But why to complicate? Why to have this complication of advance tax? Absolutely true, guys. There's no point of having this complication when the taxes could have been recovered easily after the end of the financial year. So this complication was not required, but Government of India wants to prepone the tax collections. It wants to prepone the tax collections. So TDS and advance tax both are ways to prepone the tax collection. That the objective is that we want to prepone the tax collection, and with that objective, the provisions of advance tax and TDS are introduced in our act. Okay, sir, we got the background. Now let's see some fine points regarding advanced tax. Advanced tax liability, if it is less than 10,000, or it is pertaining to a senior citizen who is not having PGBP income. If advanced tax liability is less than 10,000 for the entire year, okay, or it is paid by any senior citizen not having PGBP income, then no advance tax is required to be paid. So there are two exceptions to this rule that advance tax is required to be paid. The two exceptions are: number one, if the advance tax liability for the whole year is less than 10,000, then advance tax is not required to be paid. Or if advance tax is paid by senior citizen, if the advance tax is required to be paid by senior citizen who is not having PGBP income, then again advance tax is not required to be paid. So under these two circumstances, advance tax is not required to be paid. Then if you are falling under section 44AD, 44ADA business, guys, this we had done in our PGBP chapter, where I had told you that, if you are employed with certain specific professions or certain specific businesses, then you compute your income on an estimate basis. You compute your income on an estimate basis. Presumptive taxation regime. So if you are into falling under category of presumptive taxation regime, then 100% of the advance tax is to be paid once and for all, which is 15th of March of the previous year. So advance tax in that case is paid on 15th of March once and for all. 15 June, 15 September, 15 December is not relevant for a person who is getting covered under 44AD and 44ADA presumptive taxation regime. Next are the milestones, guys. These are the 3 milestones which are there. According to these 4 milestones, you need to pay your advance tax liability. So suppose your total advance tax liability for the entire year is 1 lakh rupees. Okay, you have estimated it at 1 lakh rupees. When did you estimate? You estimated it on 15 June 2022. Okay, you have estimated the advance tax liability as 1 lakh rupees. So you have to pay 15,000 rupees up till June 2022. Then again, guys, on 15 September 2022, you have to pay total amount of 45,000. 15,000 you have already paid, right? 30,000 additional you have to pay. So this is up to 45,000, okay, or 45%. 15,000 you've already paid on 15 June. So on 15 September, what will you pay? 30,000 more you will pay, right? Similarly, on 15 December 2022, if your advance tax liability remains the same, 1 lakh rupees, then you have to pay 75% in total. 45% you have already paid. 30% you have to additionally pay, which means 30,000 rupees you have to pay on 15 December 2022. So these are cumulative amounts. Please note that these are cumulative amounts of payment which are required to be made. And that is how the advance tax liability is recovered by any assessee. Okay, sir, got it. So guys, this was the concept of advance tax liability. Now, one very important point: advance tax liability, if not paid on time, it invites interest under section 234B or C. Okay, so interest is invited under section 234B or 234C. Calculation of interest of 234B or C is applicable for CMA final students. It is not applicable for CMA intermediate students. CMA intermediate students should just remember these two interest sections, which is section 234B, section 234C, according to which interest is required to be paid if advance tax installments are not paid on time or they are not paid sufficiently. Then interest is required to be paid in both these scenarios. Okay, so intermediate students, just remember the section. Final students, please go in the nitty-gritties of this section and also do practical questions of this particular section. Very, very, very important. All right, guys, so the second small topic which we are going to cater to today, okay, the second topic which we wanted to touch base today was a very small topic, guys: relief under section 89. A very small topic and a very, very easy topic. Okay, very easy topic and a very, very small topic. The name of the topic is relief under section 89. Relief under section 89 is given in certain specific cases. I'll take an example of these cases. Okay, sir. Previous year 2021. We have two cases. We have 2 years, okay? And previous year 21, 22. So these are 2 years which I'm talking about, okay? I'm explaining you the concept of relief under section 89, okay? So there is a person, Mr. X. Mr. X has a salary of 20,000 per month. So his annual salary is 2,40,000. His salary is 20,000 per month. His annual salary is 2,40,000. In the comment box, please tell me whether the salary is taxable or not. Salary income is 2,40,000. Please in the comment box tell me whether this salary is taxable or not. Sir, slab rate is applicable on this particular salary, and if slab rate is applicable on this particular salary, then naturally, sir, the salary is not taxable. Why? Because the first slab rate is 2,50,000. If your income is up till 2,50,000, it is not taxable under the Income Tax Act regime. So yes, guys, 2,40,000 is below the taxable salary net, which is not eligible for taxation. If it is not eligible for taxation under the slab rate, then this salary is tax free. But guys, Mr. X's salary was withheld by the employer. Employer said that I am withholding your salary. There are some disputes. Once those disputes are resolved, then we will disburse your salary. The employer of Mr. X said that I am not disbursing your entire salary to you immediately. 40,000 I am withholding back. Why am I withholding back? Because there are some disputes with respect to this salary. And once these disputes are resolved, then we will release your salary of 40,000. 40,000 was withheld by the employer. Okay, sir. Then came the next year. Next year also, Mr. X's salary was, of course, 2,40,000, which is 20,000 per month. But guys, in the next year, Mr. X got his arrears salary. Okay. What is the arrears salary? Arrears salary is 40,000 rupees. Mr. X got the arrears salary. Mr. X got the arrears salary. Arrears salary of 40,000 rupees was received by Mr. X in the next year, which was withheld in the earlier year. Area salary was received in the next year. Now, when the area salary was received in the next year, the total income of Mr. X, which was received in the next year, was 2,80,000. The total salary which was received in the next year is 2,80,000. Now, as we had studied in our salary chapter, guys, salary is taxable on receipt basis and not on accrual basis. Let me repeat. We had studied in our first chapter, guys, that the salary chapter, guys, that the salary is taxable on receipt basis and not on accrual basis. Now, if arrears are received of the previous year in the current year, then guys, these arrears will be taxable in the current year. Now, unfortunately, Mr. X will face a tax in the next year. In this particular year, Mr. X will face a tax because the salary is above 2,50,000. So Mr. X will face a tax. This is absolutely unjustified. Absolutely unjustified. Why? Because this particular tax which Mr. X will have to pay, this is not because of his salary being taxable. This is because of the timing difference in receipt of the salary. This tax which Mr. X has to pay, whatever minimal amount of tax which Mr. X has to pay, this amount of tax is not because Mr. X's salary is taxable. It is because of the timing difference of Mr. X's salary. And this timing difference is leading to taxability of salary of Mr. X. Now, this is a big problem. This is a problem which is there in the Income Tax Act. Mr. X is saying, no, I don't want to pay tax because my 40,000 rupees which you are taxing in the current year, it is not actually taxable in the current year. It is actually taxable in the previous year. This is my previous year's salary. If you exclude this, then I have salary of 2,40,000, which is again below the exemption limit. So I'm not eligible to pay any taxes. Now, guys, to curb this problem which is arising due to timing difference of receipt of salary, Section 89A has been introduced, which will tax the which will provide relief to the people whose salary is being taxed in this particular way. So this is the relief which is provided in a Section 89 to provide relief to people who are getting taxed because of this timing difference of salary. This is the applicability of Section 89A. Now, guys, you can very well Now tell me, what will be the relief which this section will provide? Of course, the relief which this section will provide will be the relief of the tax which we will pay on this 2,80,000. Whatever tax we pay on this 2,80,000, relief will be provided. Now, guys, there can be another situation. What is the situation? In this particular case, I have taken a case where the salary is below the exemption limit, but there can be a case where slab rate is changing. Okay. For example, someone's salary is 4,80,000. Someone's salary is 4,80,000. His salary was withheld in the earlier year. Okay. And his salary was disbursed in the next year. So 4,80,000 becomes 5,20,000 in the subsequent year. 4,80,000 becomes 5,20,000 in the subsequent year. This is 4,40,000. And it becomes 5,20,000 in the subsequent year. So guys, in effect, the slab rate changes. The slab changes, right? Earlier, he was in the slab of 2,50,000 to 5 lakhs, right? 2,50,000 to 5 lakhs. The slab was 5% slab. And then because of this timing difference, he moved to the next slab, which is 20%. From 5% slab, he moved to 20% slab. Now, guys, under this situation, there is a big loss of 15% which that particular person has to bear. Now, to curb this particular situation also, Section 89 is under play. Okay, sir, let's see. What is the section? Yes. So, whom is the section applicable to? The section is applicable to an assessee who has received arrears salary or advance salary, or he has received gratuity, commuted pension, family pension, etc. He has received gratuity, commuted pension, family pension, leave encashment, etc., etc. Plus, owing to such receipt, he is falling under a higher tax rate, higher tax slab. So, owing to such receipt in the subsequent year, this particular person is falling under a higher tax rate, right? This is the case where this particular relief will be applicable. Now, what will be the relief? Relief granted will be tax on receipt basis minus tax on accrual basis. So, guys, naturally, there's a higher tax because of the receipt of this particular income in the subsequent year. So, there's a higher amount of tax which is being paid by the assessee. So, tax on receipt basis. So, whatever tax is payable by the assessee on receipt basis, if the income is received by him, what is the tax which is paid by the assessee on when the income is taxed on receipt basis minus tax on accrual basis. What will be the tax if the salary is taxable on accrual basis, which is fair also? Okay, this is the fair deal. Okay, this is the unfair deal. Okay, so we'll subtract both of them, and whatever is the differential will be the relief which is granted to the assessee. So tax on receipt basis minus tax on accrual basis, that is the relief which has to be granted to the assessee. Tax on receipt basis minus tax on accrual basis, this is the relief which has been granted to the assessee, and that is how relief under Section 89 will be computed. Now, sir, please tell us, what do you mean by tax on receipt basis? So, guys, tax on receipt basis means tax on total income, including additional salary. Okay, so please see this. So, the tax which is payable on 5,20,000 plus tax on total income, excluding additional salary in the year in which additional salary pertains to. So, tax which is paid on 5,20,000 plus the tax which is paid on 4,40,000. This is the actual tax which you are paying, okay, on receipt basis, okay, both the years cumulatively. So tax on total income including additional salary, which is 5,20,000 in the current year, right? And in the previous year, total tax which is there on income excluding the arrear salary, right? So whatever tax you are actually paying minus what tax you should have paid. What you should have paid was 4,80,000 in the current year and 4,80,000 in the previous year. This is the tax which you should have paid, right? Let's see, what is the tax on accrual basis? Tax on total income excluding the additional salary in the current year. So we will exclude the additional salary in the current year and will compute the tax on 4,80,000 plus tax on total income, including the additional salary in the previous year. So if we include the additional salary in the previous year, it comes to 4,80,000. So tax which is paid on in the current year, excluding the additional salary, tax which is paid in the previous year, including the additional salary, both of them taxes are to be computed separately, and they are to be added. This is the tax which should have been paid on accrual basis, and we are subtracting this amount from the tax which has actually been paid. What is the tax which has actually been paid? On 5,20,000 we have paid the taxes, and on 4,40,000 we have paid the taxes. So if we subtract both these amounts, then we come to the figure of the relief which is granted under section 89. A very logical, a very prudent section, whereby they are removing the grief which is there in the case of the assessees, that they are, because of the timing difference of their salaries, they are paying a higher amount of tax. To remedy this particular grief, the relief is given to the assessee. So it's a small section, a very easy section. And guys, don't try to ratify the formulas. Just try to understand the formulas. Don't try to mug up the formulas. Try to understand the formulas, and you'll be able to absolutely do well in your examination with this respect. And a very easy section and a straightforward section. So yes, these are the two small topics which I wanted to finish today, because we have a test right in the evening, which is of advanced tax, agricultural income, and relief. 3 chapters are coming in the test, which is scheduled in the evening. And guys, we'll meet in the evening 7 o'clock for the test. Just be prepared for the test. 7 o'clock we'll meet for the test. And yes, that's all for this particular session. Yes, a small session, because only two small topics was required to be discussed in this particular session. We'll be meeting in our subsequent sessions. And yes, before we leave, do hit a like button on this video. And yes, please support me in my endeavor of taking test. Please come and attend the test in as many numbers as possible, because that will motivate me to continue with my test series till the examination. So the WhatsApp number on which you have to join the test is 9643 929913. This is the WhatsApp number on which the test is available if you want to join the test.